bulletin board here is here at Zacks Traders Cafe for Wednesday, the 27th of December. Starting off with the FTSE 100, which looks like it's got a mini V-shaped bull flag, hopefully enough to take it up to our end-of-year target, 78.10 at the moment, at that resistance line there from May, the red line there. Above that, looking for 80.50 by the end of next month. Obviously, that assumes that this market will do, or at least follow, the lead of the DAX and the Dow, which is maybe the moment counting for too much. As far as the support is concerned, recent support around 76.70, and then below that the old broken February resistance line 76.30, but hopefully not any lower than that. Moving on to the DAX and its consolidation here, with the recent gains going into a range between around 16,600 and obviously that resistance line target there that we hit earlier in the month, around 16,900. Above 16,900, we're looking for a new leg up as high as 17,900 by the end of next month, backed by the golden cross buy signal that we had at the end of last week. We break below 16,600. The worst we're expecting at the moment is around 16,100 and old August-September resistance, but ideally we stay on the right side of 16,500. Moving along to the Dow, and here it has been moving faster than we've been anticipating, even faster, as obviously almost going up in a straight line, which is rather rare. The target for next month was around 37,900, or the end of next month, in fact, so we could even do that potentially by the end of this month. Otherwise, we're in a rising trend channel there from October. Top of that channel going up to 39,300, which is now next month's target. On the downside, not really looking for anything lower than 37,000 on a sustained basis. The last area of interest may be 36,500 at worst for this market. Moving along to Bitcoin, which has been looking quite encouraging of late. The reason for saying that will be shown on the chart, in the sense that we've got that rising trend channel from the beginning of October. Still trying to map out the support zone there, which is around the 42,000 area. Above that, still looking for as high as 50,000 and the top of that channel by the end of next month. There is a chance, I suppose, that we'll have to test the 50-day line, now around 40,000. Worst case would be 38,000, an old initial November resistance, but ideally we stay on the right side of 40,000 at least on an end of day close basis. Moving on to gold, which has done what we were looking for it to do, which is break through 2060. That was an old target line there from back in May, above 2060, looking for, rather simply, for a retest of December resistance through 2150, and then hopefully as high as 2200 by the end of next month. Sounds rather ambitious at the moment, but that could be on the cards. If we break back below 2060, then the lowest we're expecting $2,010 at this stage, especially after the golden cross that we had early in the month. Moving on to the stocks, and we start off with Argo Blockchain, which has done exactly what we wanted it to do. In fact, which is actually there at the moment. Hit that February resistance line at 24 pence. Above 20, we were looking for 24 pence. If you're a fan of the shares and looking for greater glories, which I think after all this time probably you deserve to, then the old support area, rather, from back in 2022, back last year, at 33 pence would be the next target. So end of day close above 24, we're looking for the shares to basically fill that gap from October last year, 33, 34 pence. Worst case at the moment is we have to fill that gap down to 20, but hopefully we won't have to do that. On to a stock which I haven't looked at for a long time, African Pioneer, and here it looks as though we've got a bit of a falling wedge, or a triangle break there, breaking through the 50-day moving average at 2.15 pence, and also rising after that bear trap gap reversal. It's just basically a bit of a rug pull there, just going straight down and then straight up again with a gap, so that is quite encouraging. The 50-day line is rising now, and basically above the 2 pence area, looking for 3.4 pence by the end of next month. Not much charting information to go on there, but looks relatively encouraging after that brief dip in October. Stock which has got a great chart pattern, which I haven't actually looked at in the recent past, is ASA, and here we've got an inverted head and shoulders with a gap from the right hand side. In fact, it's a bear trap bear trap island reversal above the initial December resistance there at 62 pence. We're looking for 90 pence as soon as the end of next month. So let's see if the shares step up to the plate. The next one is Block Energy, and I think I looked at this a few days ago. It just looks encouraging on the basis of the bear trap gap reversal from below the old support there from back in March around the 0.9 pence area, above 0.9, looking for the top of the range at 1.5 pence by the end of next month. The 50-day line already starting to curl up, so that is encouraging. Stock which is rather bigger than in terms of market cap than something that we normally look at is Cab Payments, but it just looks as though we've got a bit of a breakthrough here, breaking through the 50-day moving average around 79 pence. Above that, looking for the shares to head towards the top of that rising trend channel base from back in October at £1 by the end of January. Only back below the recent swing support there around 72 pence, really questioning the ongoing recovery there. It looks rather positive given that saucer type turnaround that we've had since the beginning of last month, and you can argue that this is the handle on a cup and handle as well, so lots of charting rhetoric to go with that situation. Moving on to Emerson, which looks more leaky than a cabinet meeting at the moment. Here the shares up through the 50-day moving average at 1.5 pence. Above that, we're looking for 2.6 or 2.7 pence by the end of next month, or perhaps rather sooner than that. Ideally, the shares stay above the resistance on the way down from the end of October on 1.75 pence, ahead of a move towards the 2.6, 2.7 pence area. But great turnaround there for that situation. I think I covered GCM on Friday, and shares up 40% today, which is very nice of them. Here we've hit a target there, or the target there that we had there around 3.75 pence, above 3.75, looking for a new target now towards 5 pence by the end of next month. Ideally, the shares stay above the 3 pence area, which was the bottom of that gap there back in June. Moving along to Horizonte, which seems to have revived itself, at least on the funding front, which is actually rather good for the market as a whole, with a lot of project companies out there, and it's good to see some money around potentially. We had one failure back in November where there was a false breakout through the 20 pence area. Hopefully this second attempt, backed by the fundamentals, will do rather better. It's also a bear trap gap reversal, so a bear trap from below the old support there back in November at 7.75 pence. Above that, looking for up to 13.5 pence over the next 2 to 3 weeks at the top of that broadening triangle from the middle of last month. Ideally, we stay above the initial December resistance around 9.5 pence ahead of that move to 13.5 pence that we're looking forward to. Requested stock next for MHC, otherwise known as MyHealthChecked. Here the theory from the requestee is that we are finding a base here around 9.75 pence. And on that basis, we could then head up towards the target is my bit around 15.5 pence, which is a resistance line projection from July. If you're cautious of the shares, which probably most people would be at this stage, you wait for an end of day close above the 50-day moving average, currently at 10.6 pence. Obviously, we don't want to see any fresh lows back below 8.5 in the meantime. Another potential indicator of a move to the upside would be the RSI getting back above the neutral 50 level. That's blocked progress since October. It's currently around the 39 level. Moving on to Petrofac, which has exceeded expectations in the sense that we had a best case scenario resistance line target there around 38 pence, and we hit that today. An end of day close above 38 pence, and we could get to a new level, which is the old March support at 44 pence, maybe by the end of next month. But obviously the shares are up a long way in a short time. Ideally, they stay on the right side of that initial December resistance at 36 pence ahead of 44 pence by the end of next month. Parkmead looking rather exciting at the moment. The reason for that is that we've had a sideways shuffle along a rising 50-day moving average near the lows. And if you look at the best of 2023 Bulletin Board Heroes video, most of the big movers were actually this setup, in fact. So it wasn't even a bear trap gap reversal. It was actually this setup where the shares will drift above the rising 50-day line, currently looking for 23 pence by the end of next month, while we stay above that 50-day moving average around 14.5 pence. If you're fussy, maybe the stop loss could be around 16 pence, which was recent resistance for the shares. On to Renalytix, which has had a rather horrible end, or had a rather horrible end to 2023. Looks like it's having a last chance at improvement now with the bounce off this rather obscure falling trend channel. Bit of bullish divergence coming in there as well. And at least while we're above the initial December support there, around 15 pence, looking for the shares to head towards that resistance line there from September around 25. So above 15, looking for 25 at Renalytix, but a bit of a falling knife situation there. Another stock which is also trying to end the year on a flourish is SolGold, breaking the 50-day moving average there at 8.6 pence. We're looking for 13 pence by the end of next month at the top of that broadening triangle from back in October. We're also backed by a bear trap from below October support at 7.75 pence, so we'd like to stay above that. And we've also got bullish divergence with an uptrend line in the RSI window. On to the last two. First one is TM1, otherwise known as Technology Minerals. Here you can see that got a V-shaped bull flag, rising 50-day moving average as well. So this looks as though the recovery here, it means business. Above 1.15 pence, looking for up to 1.9 pence by the end of next month, or hopefully a bit sooner than that on what looks like a nice turnaround situation. If you're cautious, you wait for that May resistance line to break at 1.5 pence, but looks like the dirty work has been done. Finishing off with, well, as usual at the moment, with Wildcat Petroleum, and here we had a nice flourish early in the session. Still need to break that 0.32 level on an end-of-day close basis. Above that, we're looking for 0.43 and a September resistance line projection. The 0.32 really the derived from that the top of that gap down that we had back in October. So end-of-day close above that is the next trigger for the shares, and ideally we stay above the mid-20s in the meantime. That's it for me today. More updates tomorrow.